It is a constructive session for markets globally, with equities leading the charge. Welcome to MTRS_Market Pulse. Here is your India market briefing for June 28th. We cover the Nifty 50, Sensex, Bank Nifty, and the stocks dominating headlines today. Let us start with a snapshot of the Indian equity markets today. Starting with the Nifty 50, India's benchmark large-cap index. Nifty 50 is broadly flat at 24,056 Indian rupees, awaiting a fresh catalyst. Equity markets are responding to reports that tech stocks drive unnerving sell-off in global markets, The New York Times. Nifty 50 is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $24,537 resistance and $23,575 support as the boundaries of the current range. The Sensex, tracking India's 30 largest blue-chip companies. Sensex is little changed, hovering near 77,100 Indian rupees. Equity markets are responding to reports that tech stocks drive unnerving sell-off in global markets, The New York Times. The Bank Nifty, India's banking sector barometer, is closely watched by traders as a leading indicator for the broader market. Bank Nifty is broadly flat at 58,177 Indian rupees, awaiting a fresh catalyst. Investor sentiment is being shaped by how investors are reacting to Bank of America, BAC, upgraded net interest income guidance and profit outlook, Simplewald St. Bank Nifty is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $59,341 resistance and $57,014 support as the boundaries of the current range. Now let us look at the stocks making headlines in India today. ICICI Bank is trading higher by plus 0.98%, at 1,387 Indian rupees. Retail loan growth, mortgages, personal loans, credit cards is compounding strongly. The digital banking platform has dramatically reduced customer acquisition cost, giving ICICI a structural margin advantage. Asset quality remains the cleanest among large Indian banks. Any NPA deterioration would be the key risk signal. TCS is trading lower by minus 0.62%, at 2,095.90 Indian rupees. Large deal wins, measured by total contract value, are the most important signal for TCS revenue trajectory over the next 12 months. BFSI and retail verticals in North America are the key spending sectors to watch. Any IT budget revision by U.S. banks would move TCS estimates meaningfully. SBI edged higher plus 1.02% to 1,045.20 Indian rupees. The YONO digital banking platform is building a retail liability moat. Corporate loan book quality, the historical weak spot, is now at decade-best levels. The dividend policy has become more generous. Watch for any RBI guidance on priority sector lending norms that could affect cost ratios. Now let us look at the macro backdrop for Indian markets. The rupee is strengthening against the dollar, trading at 94.30. A softer rupee compresses margins for import-heavy sectors like oil, consumer goods, and airlines, while IT exporters like TCS and Infosys benefit. Equity markets are responding to reports that oil nears pre-war levels, but a top economist warns lower prices could mean higher inflation, Business Insider. Foreign institutional investor flows are the near-term swing factor. Any risk-off in global markets tends to amplify selling pressure on Indian indices given the high FII ownership in Nifty 50 constituents. The biggest mover in India today is SBI. SBI edged higher plus 1.02% to 1,045.20 Indian rupees. The YONO digital banking platform is building a retail liability moat. Corporate loan book quality, the historical weak spot, is now at decade-best levels. The dividend policy has become more generous. Watch for any RBI guidance on priority sector lending norms that could affect cost ratios. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Thousands of investors rely on our daily briefings to cut through the noise. If you are finding value here, please like this video and subscribe. It directly helps us keep producing this content every day. Leave a comment with your market view. We feature the sharpest takes in future videos. That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is your India market briefing from MTRS_Market Pulse. Subscribe for daily coverage of Indian and global markets.